Good morning, peoples. Bruce with Targeted Wealth Creation here for the first weekly distribution in January. Now, they declared previously on 12/31, had an X date of 1 January 2nd, and the pay date was 1/3. They paid 33 cents, okay? And now I'm just giving you the previous week to explain this just in case somebody's new. Most people that listen to these, you get it, but somebody that's new, I always just cover the basic. So previous week's weekly yield was 34.89. We had a 60 and a 62 where they were doing return of capital. So we're getting back to a smaller payment. Now remember, these are weekly, okay? But still, we use a process here to try and annualize that yield. So because I use 52 payments, that's the benefit on the weekly. Um, so what happened this week? So we declaring on 12/7. You must buy on 12/7. The X date is January 8, and it's paid. The 10th is what? Friday? Yes, the 10th is Friday. All right. So, what did it do? Well, it moved up on a weekly basis, right? So, I color code these. The only thing I track is did the fund underlying value go up or go down each week? And then obviously I collect the total because that has to do with NAV loss or NAV gain, right? And then those of you that have seen these, I update them when the month is closed. Okay. So this is what is like charting. Now, granted, this isn't the biggest in the world, but I was asked by a few subscribers if, since they varied so much in weekly, could you do some kind, or sorry, they vary a lot on the week's distribution. You know, you'll get a 40, you'll get a 20, you'll get a 15, you'll get a 42. So what does it look like? Well, and you're seeing the reason some are in green, again, this is summary. The reason some are in green is those weeks, when you have 52 weeks in a year, you end up with 3 months out of the year typically, but it's what, 4? Yeah. So you do 4, sorry guys, it's 48, right? And then, so what happens is every third month, I don't track the months down here, but since inception, this thing started paying, I think, in April. I'll go back. So your greens are your 5-week months. January will be a 5-week month because we declared on 12/31 and we paid on the 3rd of January. So you're going to get the 3rd, the 10th, the 17th, the 24th, and the 31st. Or whatever it works out, I take actual pay days, not declaration days. So you notice here, sometimes when you're comparing a 5, you go, okay, well, there was 5 weeks that paid that month. So that's higher. So that's the only reason I do that. So they had a fantastic December, the highest in what, 9, 1, 2, 3, 4, 5, 6, 7, 8. You have 9 full pay months. And we're now 2 weeks of a 5-week month pay. So this one should be pretty good, but December was really the best. Up until that, the August 4-week payment was better than any of the 5-week payments. So just something to note, right? When you're looking at this. All right. So what fund am I looking at? As a reminder, this is XDTE. I know some of you just quickly want, what did it pay? It's right there. I always make the color code of the current one in the yellow orange, and I turn it to green, and then I put the next one, right? So on 114 when they're declaring again. All right, guys. So, and then the yield is based off of this. It's based off the current price. So we trended up after 2 weeks of 1.5 losses. Again, this is on a $50 fund. But we had that fabulous two big payments in December that were, got contributed additionally to with return of capital. So that's awesome. All right, let's go down and look at QDTE, which is the NASDAQ 100. All of these summaries get shown in my next tab that summarize everything. How's it doing at total return? How much NAV loss or gain? How much total distribution, right? So here's the NASDAQ 100. So you can see right in this column, 18 cents. The other was 18 as well. Now this one's priced $10 cheaper, right? You're talking a $50 fund for your XDTE and a $40 fund for QDTE. It also was up. All three of this, including the Russell, were up slightly, okay, after having 2 weeks of being down. Now, interesting, on this one, this month was better, but because it had two 80-cent payments, right? And now we're back to an 18. So I believe, and that's true, that in its summary chart, it also was the highest. It beat everything. Its previous highest was also August, not by much, just barely beat the previous 5 week, whereas in the S&P 500, this one won more handily over. I mean, this is comparing itself, right? When I do the tab, I'll show you how the funds compare to each other. And sometimes people are surprised at that. So anyway, we're 2 weeks into a 5 week month pay. And here we are with the Russell. So you can see the Russell paid 20 cents and it's priced at 41.45, much closer to the NASDAQ Roundhill Weekly than the $50 price of the S&P 500 fund. It was up 23 cents, not quite as much as the 50 and 51. Okay, it also hasn't been paying as long. So sometimes when I do my comparison, it's better in some aspects, not as good in other. Well, you'll see that it hasn't been paying. So what else paid? Here's XPay. And surprisingly, XPay's doing pretty well. I know there was a lot of interest actually. Why XPay? Why Target 20? Yieldmax, Roundhill, Defiance has a couple. What they're doing is these ones that almost do a lot of, Yieldmax has come out at times and Jay has said, hey, this is a return of capital first and foremost, right? And what that means is we're going to focus on income and distribution. If we have NAV erosion, so be it. We want to be a very high payer. Well, if you can have almost as good, and I'll go through that on the next chart, my argument with that is let's make up something. Let's say I got a 50% dividend return on an ETF. I owned it for 12 months. Okay. So I got 50%, but I lost 25% in the price of that ETF. Okay. So what did I really have? What's my realized actual total return? Well, it's 50% minus 25%. So out of 25%, hey, you get 25% a year, year after year after year, but you can never project out what 1 or 2 years are and assume that that's a trend. I see so many people ask in the interviews, and I've interviewed some of the fund managers, and they'll say, I saw Jay on one, and somebody said, well, Jay, are these funds going to be around for the next 10 years? Well, they don't know. They have no plan to get rid of them. As long as the fund's functioning, it's making money, people are owning it. Well, people are going to own it as long as the stock market allows them to yield money from options and pay out. The thing you, the investor, need to do, that's why I do all this total return and teach this. You need to look at the overall picture. 1 year, I mean, the NASDAQ can go up 80% in a year. So you can just own stocks sometimes, and get the right stocks and make 80%. And I know a lot of you say, Bruce, I'm retired or I really want to get income. I get it, right? I won't even get in that argument now whether sometimes it's better to own an underlying stock than it is to just own the income. Okay. What I'm preaching is total return, and I think that's important. So going back to why does Roundhill, why does Defiance, why does Yieldmax, why have they moved into these categories of targeted income? Because the NAV decline, even though, my example of 50 for a dividend yield, maybe it's 70, but let's say I had a 40% NAV loss. Well, 70 minus 40 is 30. That's still okay. That's still a 30% net. But what if somebody else had a 25% NAV dividend return and a 15% NAV increase? I got 40, right? So at the end of the day, you pick the total return that's higher. Now, some of you say, I get to use the money along the way, Bruce. So if they're real close, go get the one that pays weekly or pays the higher, yield. I get it, but not when they're dramatically different, right? One gives me a net total return of, say, 5%. Another one gives me a net total return of 25%. In that case, I want to go with the 25, even if it yielded less money along the way. I still had a 25. You can't say it's not real. All right, so XPay is Roundhill. They came out with this. It launched on 10/31. I'll show you on my summary sheet. But what they do is they target a distribution of 20%. And you can see that that's pretty close. Okay, this thing came out around 58.40. I'll show you on the next page. This one's so new, it's hard to do any long-term statistics, but I wanted to explain it to you. So, it launched here, or actually, I take it. See, it launched before this, right? So on 11/5, it made its first declaration, but it had a launch price of around 58.40 on 10/31, the close price. So I use that in my other page. So it's only like 30, 35 cents down, but it's been yielding. And what they do, the best I can tell, right? I haven't been able to discern this completely. They paid on 11/5 and they paid on 12/10. And then they announced that they're going to declare for January going forward. Well, I think they're going to do at least a quarter at a time, but we'll see. Maybe they're going to, go along the way. And what they're saying is they're targeting a 20% return on the yield, but their performance is very likely to equal what the S&P 500. So if the S&P 500 goes up 35%, they should have a nice NAV gain in addition to targeting their income portion. But no matter what, let's say the S&P 500 drops 30% in an overall year. Well, they may have been paying you 20%, but they had to get the money somewhere, right? If they paid you 20% and the S&P 500 had a 35% loss, you're going to see some loss in these. But in general, these targeted are safer. They're closer. They're not going to pay you 110% yield and then have your NAV loss be huge, like some funds. And Yieldmax has some like that, but Yieldmax also has some good performers, right? I can't go out and say, oh, all Yieldmax funds have big NAV losses. Not true, right? Misty, some of them, and NVIDIA, some of them have held up. Tesla is finally starting to turn around. So you just have to look at total return. All right, guys, let me get, one more. So YBTC has paid. Remember, now they pay monthly. Everything I take it back. So does XPay. All right, let's go back here. Okay, these guys are a monthly payer, so we just happen to catch it. This is not a weekly pair, but while I'm doing Roundhill and it catches a monthly, I'm going to show you the monthly funds that paid. All right, so before I'll go back to YBTC, let's look at the summary. Okay, because I was showing you here what each of the payments were. All right, so let's jump up here. Here's your XDTE, your inception date of it, and the NASDAQ 100 weekly pair. Here's what the inception price is. Again, you look in the rearview mirror, your results may be different than mine when I look in my rearview mirror, which means your price might be different, but I had to use something, right? So I used this launch price. I said $1,000. The only reason I even use any monetary value is so you can see what the dollar loss would be. But this sums it up percentage wise. Okay. So when this thing launched, it was $52.40, 6 cents. Well, for quite a while, it's been above that. But now we're 306 days into owning this. When we hit March 7th, if you bought it, you would be at the year. But what I do over here is I show you, okay, so you got a 3.53, which isn't much really. This is more substantial. So you've got a 3.53 loss in the 306 days between what it's worth right now and what you bought it there. I know, guys, if you went out and bought it at 47 and you owned it for a long, kudos, good job. All right, so 306 days. So what do you have? Well, you have a dividend. This is important to see which one you like the best, right? If you look at it just based on dividend return, 9 months worth of dividend return, well, the NASDAQ 100 has returned 28.53%, better than 20.46, better than 1243. But hold on. You cannot compare 1243 because it's only been paying for 119 days. So how can you get up to $13? It actually, on an annualized dividend, is the highest payer. So what do we mean by an annualized dividend? Well, we figure out how many days and use divide it into 365 and you get a multiplier, and you multiply the multiplier. Okay, so both of these guys here are using this number. This one is using a bigger number because it's 119 days. So I've got formulas in here for inside Excel for what the current date is minus, the inception date. So if you bought it at a different time, you have to calculate your own. All right. So this is important. 2441. Anybody that just wants to go see what it got paid, you can go to their website, you can listen to my video. But this other stuff I think is of value. So what did I do with this 353? Why do you say, Bruce, the loss is 4.21%? Because this is 306 days of 365. So when I annualize it, it's actually a 4.21, just like my 20.46 dividend return annualized is 24, almost 24 and a half. So nice payers, right? Good job. Now, this one, you're comparing apples to apples here because they've both been in existence for 306 days. This guy, maybe he doesn't do better than the NASDAQ does when it gets to 306 days, right? I mean, that's all. So look at here, though. Most of you would tell me, oh, Bruce, I don't want to own XDT. I want to own QDTE. It paid 28.53. Look at the annualized. It paid 10% more. Here, it's 8% more. So when I finish, it'll be 10%. But look here. You had an over 10% drop in the value of the underlying fund that you purchased. Okay. So these, anybody could argue they're neck and neck, right? And so I go right back to you saying, hey, I get paid more along the way. So I prefer QDTE. And I can accept that because these are so close. Okay. And my argument here, Russell's been trending up, but hot things in sectors change, right? The Russell was so undervalued 3 or 4 months ago when everything in the NASDAQ, the Mag 7 and all the big guys, they were flying, and the poor Russell was just undervalued. Well, the Russell played catch up. That's why you had such a, now the last few weeks, it's underperformed for the last month or so. I don't have the chart up to know exactly. Okay, so sometimes I go into this kind of detail to let you know what's going on. I will get this kind of data for XPay, right? But I can say to you that it was what, 58.40. You can look it up on 1031. Inception price 57. I take it back, 57.30. Well, what did I tell you? It's now at 58.05. Okay. So it's up a little there and it's trending well on getting its 20%. So I'll start doing these kind of analysis soon. All right. Final on YBTC. All right. So here's your new payment on YBTC. Again, monthly payer, even though it's Roundhill, not a weekly payer. What did they pay? Well, it dropped down quite a bit, guys. I'm a little shocked. $4, $2, $1.80, 91, 206, 161. Now, the last day or so, crypto started to take off. But maybe it just, this is a very low payment, 53. It was a dollar 63 and a dollar 77. There was an 88. So bottom line, and your weekly change 201 because that's right up through yesterday, right? That's the close on 6, January 6th. So bottom line, and this is an analysis I did previously, so I quickly came in here, put an additional dividend that YBIT got, because I like for you guys to see analysis, okay? Otherwise, do you really need me just to go tell you what it paid? You can go look it up. But I'm trying to do some value add here. So with YBTC, okay, they came out at 48.54. YBIT, and I pushed YBIT and I reviewed YBIT and I said, oh, this is going to be good. Yomex is in crypto and I love Misty and Coney and all that. Well, I started seeing that BITO, their underlying, and they said they didn't know that BITO for quite a while under ProShares was paying very little its first year. And then so BITO is a ProShares that trades futures on Bitcoin. So it's not exactly BTC itself, but it's playing off futures and the derivatives. Okay. And it started paying a lot, $1.80, $2, $1, all of those kind of numbers. And and it was performing better, but with those big payments, every time they would distribute, say $2, their fund has to drop by that big distribution. And when Bitcoin was not moving up and it ran up to 74, traded back down into the 50s, and then we ran to 100, 108, pulled back in the 90s, and now we're starting to come up. So the issue there is I could see right away after 2 or 3 months that YBIT wasn't going to do well. It just was not a good fund. I kept my BITO, didn't buy any other at that time, but I swore off YBIT. And so when I saw Roundhill's YBTC, different inception dates, right? So you've had a chance to collect more dividends. But let's look at all this. So you got 355 days owned by YBTC. You have 260 days owned. Well, they just came out with the payment, and YBIT, I think, is in Group B. I'd have to look, but they had a payment about a week ago. Okay. So I have that one added in here. And look what happens. So this is much lower priced, but from 2045 in 260 days, its current price is 13.15. So what does that tell you? That tells you that your gain or loss when you annualize it, right? This is a 35.7 NAV drop in 260 days. Well, when you take it to at that rate, keeps functioning like that, that's 52% loss in your money when you bought at inception. Okay. You did, however, get based on the $7.62, and Max can pay some good distributions, that you've gotten 52.28. But don't go out there celebrating. If you bought it at inception and have every payment, what is your actual total return? Break even, right? Well, yeah, but Bruce, I got the money every month and okay. But would you rather own YBTC? I would. 57.92. Okay, what's it done? Well, its price on January 7th is 52.7, right? Its inception price, which is going back to 1/18/2024, was 48.54. Again, and some of these can vary a lot. It's like, okay, maybe I should measure YBTC with the exact period of time that YBIT, but I can guarantee you that it would be better, maybe not as much, okay? But this has had plenty of time to show itself, and it really hasn't. This is not untypical, right? So you have the dividend. So its dividend return, what did I do here? I didn't put that. Okay. Sorry, guys. So 47 just on dividends, 47.76 to 37.24. Okay. That's non-annualized, right? That's based on price and other. That's based on this price, okay? And that's based on this price. So 355 days owned versus 260 days. So when I annualize that, YBIT has a slightly 3% higher, okay? But look in total return. There's not even in the game. That's why total return in NAV, right? Did my underlying go up or go down? And then I add those two together. So I break even or I get 58%. I think I know which one I would do. Okay, guys. So that's worth looking at. Let me know in the comments if there's something you want to see. I do think this XPAY, XPay is a pretty good targeted fund. If you know somebody that's elderly, doesn't need a lot of risk. I mean, when people say there's risk, the risk is stock market risk. If we had a 1929 depression and the stock market went down 75%, then you're going to lose a lot. But again, if you're just riding along and want some income, I think it's reasonable. And my forecast and my awareness of the cycle people I follow, it could be a volatile year this year, but I don't know that we'll have it. I mean, we could drop 20 or 30% and go through one of those and turn around and recover. So overall, 2025 remains to be seen. I expect it to be volatile, but I expect it in general to be a break even to an up year, not a big down year in total. But we shall see. We have a whole new government coming in, new administration, new ways of doing things. Let's see how they execute. All right, guys, that's what I got for you. I know this was a little bit longer, but I wanted to get you the details behind what I'm showing here. All right, again, this is Bruce with Targeted Wealth Creation. I'm not a financial advisor. This is not financial advice. It's for fun and entertainment. All right, guys, out. Bye for now.